Am live, and I'm trying to figure out how this stuff works. And I am going to test the live stream. This should be streaming to Facebook and YouTube. So normally our producer, Dion, is handling a lot of this stuff, but we are kind of on our own. Testing this out till we get a guest to talk to. So I'm going to add a screen for you guys that is going to allow you to see what I'm doing. And that is screen 3. So we'll get rid of that music. So I just added the message. Ask a question. Here. And the topic that I'm going to talk about today is real estate investing and really how that works. If anybody has questions, I met with some clients this morning about wealth building and what you really have to do to be successful investing in income real estate, and the places that are returning the most amount of money. One of the basic formulas that we work on with the real estate investing is that we make 1% of the initial price of the property as the monthly rental. So, for instance, if we buy something for $100,000 and we rent it for 1%, that is $1,000 a month for the rental property. If we buy something for $70,000 and we put in $30,000, that is our total ARI, and that's our total renovated investment. And so if we think that that house is going to be worth $100,000, that's what we're going to call $150,000 ARV. That's after renovation value. Now, the big question for a lot of people is, how much money am I going to make on my real estate investment? And that is a thumbnail as well. And most of the formulas that I use are a thumbnail so that we could understand just by looking at a certain asset and deciding whether it's going to be valuable or not. And that thumbnail is our 1% of the investment for the rents. And then we could take that and decide whether or not that figure is making sense with the rental market that's available in that area, and whether or not that particular property, after we make the investment, after we buy it and renovate it and market it and manage it, are we I don't know what this is. Social comments display here. Click on them to showcase them on the screen. Okay. So I like to make everything basic so that everybody can figure out, exactly what they're doing. And of course, all of these strategies and all of these formulas are in my book, and the worksheets and everything are there for you guys to coach on your own. And so let's go to some marketplaces. But I was going to explain the formula for how much do we make. So we buy something for $100,000, and then we rent it out for 1% or $1,000 a month. And then if we're looking at backing out interest, insurance, and maintenance costs and all those things, my rough thumbnail of in our pocket revenues after that is 50%. And what I mean by in our pocket means that after we distill out all the expenses, then we have a certain amount of income that we have to pay taxes on. And when we pay taxes, then that ending number after depreciation is our in our pocket money. So if we're going to spend $100,000 on something and rent it out for 1%, that's $12,000 a year in income. We're hoping that we're going to make $6,000 a year in our investment, dropping down overall. Plus, after that, we're hoping that the asset grows and then starts giving bigger returns monthly. And as it ages and cures, the $100,000 house becomes a $200,000 house. And typically, as the assets grow in value, the 1% rental rate doesn't hold exactly. Like, for instance, if we buy something for $100,000 and over 5 years, the property becomes worth $200,000. It doesn't necessarily mean that that property is going to be yielding $2,000 a month. It may be yielding $1,650 a month. However, our ARI or our after our ARI, our after renovated investment, is at $100,000. And so as it grows in value, then our $100,000 investment is yielding $1,650 a month. And that's well over the 1% valuation. Or if you look at it backwards, you can look for what things are renting for. And, we want to apply that ratio to the value. So if something's renting for $1,200 a month, then we'd like to get into that property at $120,000 or less. So let's look at a market on the screen up here really quick that is not a good market to purchase in right now, because it's so overvalued that it's hard to make our numbers work. So here's Denver, Colorado, and we're listing from lowest to highest. So let's just pick whatever the cheapest house that we can get a hold of. Let's look at this house. It's been discounted $25,000. And this is an 857 square foot house, 2 bedrooms, 1 bathroom. That is $325,000. So if we apply the formula that we were just talking about, that's $3,200 in rent for a 2x1. And I don't know that that's going to be available to get that much money. So let's test that. This is the 2000 or 80216 zip code. So let's go back to Zillow and use that and type in that zip code. And what we're going to do is we're going to go to home types, houses, and we're going to do 2 bedrooms, 1 bathroom. And then instead of the sale price, which you could tell ranges, I mean, from the house we looked at on up to $500,000 for 2,000 square foot, 4 bedroom, 2 bath, 3 bedroom, 1 bath, 2 bedroom, 3 bath. That's interesting. 2 bedroom, 1 bath. So 2-bedroom bath, $400,000. So let's switch from the buying side to what's for rent, and let's see where that is. This is fairly close. This is another one that is fairly close. 750. Our house that we were looking at was 800 square feet, 2x1. But if we look at this, that's $1,895 a month, and it was listed 65 days ago. So if that was a bargain, we wouldn't see it. Every time that we're looking at comparables, if it's a bargain, then it's not there. These houses, this was listed 10 days ago. If it was snatched up, it would say pending. And that also happens when we look at the Facebook Marketplace, which is another tool that we can use to see what's happening and what's available with everything. So, but let's look at the $325,000 to $400,000 price range, and 1,800. That's almost half of what we really need to get. Here's another one: 2 bedrooms, 1 bathroom, 725 square feet. If we're going to pay $300,000, $400,000 for this, and it's only going to rent for $1,900, then that's problematic. Here's 4 bedroom, 2 bathroom, renting for $3,000, and that's probably a $400,000 or $500,000 house. So one of the things that we're thinking about when we're doing this investment real estate is that we're going to get a usable income that's going to pay for the expenses and make us money as we go. But then we're also counting on the long range increase in equity that is so important. And if these houses are selling for $800,000 and you buy it today, and you're hoping that you're going to be making the money on the house, and then you're hoping that you're going to take a increase in equity that's going to grow that and help you eclipse those numbers and get larger rents and more money from your investment. Do we really think, and let's go back to for sale, and in this zip code in Denver that we just picked at random, here's a house that's 3 bedroom, 1 bathroom for 1,000 square feet, and they're asking for $800,000. Been on Zillow a year. Here's one that's been on Zillow for 35 days, and that's $750,000. I don't want to argue yes, no, maybe so. Is it worth it? Is it not worth it? I don't want to get trapped up in that. But the thing that I'm going to ask you guys as investors is, do we think that in 5 years this house is going to be worth $1.5 million? Is it going to double? Because if it goes up really, really fast, then that may be a reason to invest in something that's not giving you the investment that you want to return that you want to get, but it's an equity play that we really hope is going to go up in value. So let's go to a different market, which is a favorite market of mine, is Oklahoma. And let's look at Norman, Oklahoma. And Norman, Oklahoma is a really interesting situation because the University of Oklahoma is in Norman, and it is a really neat little town that has a lot of growth going on. It's one of the faster, Oklahoma is one of the faster growing states. Oklahoma City is one of the faster growing cities. And one of the reasons that I believe this to be true is the fact that Oklahoma is affordable. And if we look, I'm looking at 2-bedroom, 1-bathroom in Norman, and 800 square foot. This house was $300,000 or $400,000 in Denver. It's $139,000 here. And we're in a competitive market right now where interest rates are high enough that the buyer has a little bit of leverage because there's less buyers because of the higher interest rates, and they can afford a lot less monthly payment because of the interest rate. So for instance, you've got this 3-bedroom, 2-bathroom for $169,000, and they reduced it in August. So this is a house you can make an offer on. But from an investment strategy, let's just see what this looks like by doing the comparables that we did in Denver. So $169,000, 3x2. Let's do 3x2, and let's switch from 73071. Let's stay in the same zip code, 73071. Let's switch from sale to rental. And remember, we are $169,000 on that other example. I would probably offer less, but if we look at the range of rents that are available, we're in the 12 to 13, 3x2. Here's one 8 days ago, and it's $1,400 a month, and pretty cute little house, fenced in backyard. We've got a 2-car garage, which we like. So if we were following pro forma exactly what we were wanting to get at the 1% level, or the 1% guideline, at $169,000, we would like to see our rents at $1,600, $1,690. But one of the caveats in that formula is if you're in a part of the city or state or zone that you're in, if the prices seem to be on an upward trajectory and they're making more money in equity growth, typically you're not going to get the 1% that you are looking for. You're going to have to sacrifice a little bit of monthly to gain in that growth in the asset, and then you're going to get it back a little bit later on. So in this case, we're at a 0.8 or so. And I generally, as a rule, when I'm trying to price my properties and I'm trying to make sure that I have a very worry-free experience, I want to price at a nice house for a little bit less than the going rate, and then be really picky on who gets to rent it. Meaning that they have good credit score, they have good job history, they have good background check. And I I have several things that we need to do as far as meeting the people and making sure that they're a good fit for us. And typically, the best renters enjoy lower prices. And even if they can afford more, their good reputation and good rental history leans to them being offered rental properties more often than some of the people that are troubled with their credit and their rental experiences. And so if it's a nice house and it's a little bit lower than market value on the rents, you're going to get a much better clientele with way less excuses. And that's what we're looking for. So in my estimation on this particular house, I would want an aggressive realtor to help me go in and make an under listing offer. This other house was at 169. I would offer as little as 150, and maybe we settle at 160. And then I would expect to rent this house for $1,300 a month. And that puts me solidly in the winner's circle to get the best renter that's out there, because we've got this house at 1225, and it's not the nicest. You know, the yard isn't very nice, and the inside is okay, but compared to something that is, let's pick this 1450. Well, let's pick 1450 a month right here. This house is considerably nicer, covered back deck. You know, if we're going to buy this house for 150 and rent it for 13, then we're beating the competition all over the place. So let's look at a market that we can get 1%. And that's the more rural market. And let's look at Oilton, Oklahoma. And as you can see, there are no rental houses available. Hey, Dion.
Hey, happy sober Sunday.
Hey, I'm doing a real estate live. You want to jump in?
It's pretty busy around here. Our client is at end of days, so the church people are over here coming and talking with her and stuff like that. So otherwise, I would.
Okay. Well, I was just kind of running through this, and I've got a couple of ideas for some sobriety shows that I know you want to do.
Okay. And I'm not.
Well, let me talk live and up, and then I'll call you back.
You got it. Sounds good.
Okay, so we are going to look at something in Oilton. This is a $100,000 house in Oilton, 2x2 by 1100, and this house is probably a $700,000 rental house. So we need to be probably at $65,000-$70,000 here, and they're there, and I've got the real estate agents that can get us there. That's kind of a weird looking house, but Here's a house in Drumright, Oklahoma. This is another small town, and I know that 2x1. I can tell you that this will rent out at a 1%. This was cut by $2,000. This house is likely to go on a cash offer and a quick closing for $50,000, and it'll rent for $650 a month all day long. And when we're talking about after renovated value, that's an important consideration, because it looks like we're going to have to put some flooring in here. It looks like we're going to have to update. So, there's probably $10,000 or $15,000 worth of work here to get it up to snuff and make it nice, and then get it rented out. So, look at that. That's interesting. That is very interesting. It's got a little deck on the back of it. I wonder if it includes this outbuilding. This is really not so bad. I like that. There's a lot of meat on the bone there, and there's some fix-up costs there, but it looks like you've got a little workshop, and that's a decent one. And part of this winning at all this stuff is knowing what the formulas are, seeing how they fit, and if we look at 57,900, and let's say that we've got a after renovated value of add 12 to it, so that's 69.9. Can you rent this out for 700? Possibly. I might want to sharpen the pencil on this. So, but this is very good example of where you're going to get 2%, or are you going to get a 1% return? And the factor is, will this double? And we're looking at affordability. We're looking at people coming in from other places that are wanting to invest in some of these smaller towns. I've had several double from 50 to 150. Will it continue on that trend? I don't know. But I can show you properties that I own that have doubled. And as always, I'm going to wrap up this live, and I want you guys to reach out and call me if you have any questions, and I'll include you in a future live, and we can answer your questions live on the show, or just send me an email, mark@markhope.com, or message me in the show podcast group, or just stay tuning in, and let's continue to do well by doing good.